Rural Americans deserve access to the best of what our nation has to offer, especially health care. Across every state and every community, America's rural hospitals are the first line of defense, protecting our families, neighbors, and loved ones. No matter where you live, hospital care doesn't clock out. They're there 24 hours a day, 7 days a week, 365 days a year. Each year, America's over 5,000 hospitals care for millions of patients, providing 24/7 emergency care, delivering babies, cancer treatments, and other life-saving care that patients rely on. Behind every one of those patients are doctors, nurses, and caregivers working tirelessly to keep people healthy and safe. Hospitals are our community's lifelines. They employ our neighbors and keep our families healthy. But now, some in Congress are threatening access to care. Tell Congress, protect patient care to keep America strong. Don't cut rural health care.
The Larry Kudlow Show on the Red Apple Podcast Network.
So, welcome back, folks. I'm Larry Kudlow. We've been trying hard to cover the Iran war with the brilliant bombing, surprise bombing from the United States and Israel. We had General Jack Keane on. We had Ambassador Robert O'Brien on and others doing the best we can to keep up with events. I think we've covered it pretty good. By the way, you can live stream us over the Internet for coverage. Let's see, LarryKudlowShow.com, LarryKudlowShow.com, all across the country and around the world, throughout the solar system, including the Milky Way, live stream us. And during the week, Fabulous Fox Business. The name of the show is Kudlow, 4 to 5 p.m., Monday through Friday. If you can't make it at 4, you can, I don't know, just text your favorite 9-year-old and she'll show you how to DVR the show. You'll never miss a thing, I hope. Bad week for stocks, kind of, sort of, I don't know. The Dow is off 1.3%. The S&P 500 less than that, 0.4. The NASDAQ off a percentage point. Doesn't look that bad. I think people are telling me how bad AI is. I don't buy it. I think the market knows there's an issue, a war. It's going to be temporary. Oil prices, jumped up. Brent crude is up almost 20% year to date, and West Texas up 17%. But this is temporary stuff from the war. The market is oversupplied with oil. So that's my take. With great fear and trepidation, I will bring in our two distinguished guests. Enormous fear and trepidation. There's no telling what they're going to say during this wartime broadcast that I'm attempting here on a Saturday. He who laughs last laughs hardest, or something, I don't know. Ken Polcari, whom I've known for years, chief market strategist at Slate Stonewell. Jim Iuorio, whom I've known equally for years. Never understood what he was talking about, but he's director of TJM Institutional Services. You know, Jim Iuorio, you're a restaurateur in Chicago, but meanwhile the Bears are moving to Indiana. What do you make of those apples?
No, they're not. That's a ploy. They're just using their leverage to get the state of Illinois to allow them to move to Arlington Heights, which is 3 miles away from my restaurant on the same street. So it might be my book talking, but that could make me a sizable amount of money if they declare the Arlington Heights site. But I do think there's a chance they still want to stay in Illinois, and that was just a ploy. What do you think, really? Do you really think they're moving to Indiana?
I have no idea, except that the management of Illinois, both Chicago and the state, is
what you're about to say is going to be the most underrated. Yes, that's terrible.
I mean, these guys, all they want to do is tax you to death and regulate you to death, and not keep the peace. I don't know. So stay in Chicago. Listen, the New York Giants moved to the Meadowlands in New Jersey. I mean, the football Giants were a mainstay, Yankee Stadium. I actually saw them in the Polo Grounds when I was a kid. That's a long time ago. And the Jets play in the same stadium in the Meadowlands. And neither teams have done squat for 20 years. So I don't know, maybe there's something to that. It could be. So Jim Iuorio, while we're talking about this story, what's your take on the world? What's your take on interest rates in the stock market?
So the first thing I'm going to say, about my take on the world is that it seems so odd to me that the same people that were screaming about us not doing enough for the Ukrainian people are saying, how can we be going into Iran to help the Iranian people? So everybody just talks their book instead of evaluating each individual policy on its own, and it's so frustrating. How the world is, we knew what was going to happen in Iran. It seems like that's one of the reasons that oil is up 20% since the beginning of 2026, which, by the way, the other reason I think is that people genuinely believe that the U.S. economy is better than anyone had thought it was going to be and more resilient than anyone thought it was going to be. How's that for being optimistic on a Saturday morning, Mr. Kudlow? But the stock market is fascinating to me. Okay, let's go to NVIDIA posting really good earnings and then getting clobbered. Okay, that's kind of indicative of the whole market. The market is at a nice lofty level. That 7,000 level above the S&P hangs like the sword of Damocles and is resistance above. And what it's telling us is that it's kind of put up or shut up moment for the U.S. economy. We know that the economy has the tailwinds of the tax cuts going into 2026, deregulation, return of some foreign investment, which would solve some supply chain issues. But all that kind of stuff takes time. So the market is telling us we need to see some real meaty results of that before we push through that 7,000 level, which is fair. We've had 3 years in a row of double-digit, average 20% gains. What usually happens after that is the fourth year, the average is about 5%, well below the historical 9% average, and it's a midterm year, another volatility-inducing event of that. So the fact that the stock market has stalled out a little bit here is perfectly reasonable to me, and I don't think it's indicative of any sort of economic event.
I don't. By the way, well said. But Ken Polcari, I don't understand this. It's what Ed Yardeni is calling the AI derangement syndrome, and he's right. It's like Trump derangement. It's like now everything is bad. So you have these big companies, these big techie companies, scaling up capital goods, making use of 100% immediate depreciation, write-off, bonuses, etc., building factories, building power stations, etc. To me, this is all good. And yet you've got people glomming on to half-baked research reports that tell us how bad AI is going to be for the world. And if any company like NVIDIA, so they're investing heavily in new technology, new chips. Okay, fine. Isn't that what we want them to do? I want Google to invest heavily. I want them to stop with their wokeness. But when it comes to the rest of what they do, if they're going to have a better robot or a better ChatGPT, fine. This is the time to do it. Why is this bad? Why are people so panicky about AI and software and the like?
I think it's just the recent kind of conversation and the nervousness and anxiety that's building. And then you see headlines like yesterday at Block, Jack Dorsey, and he said it very clear. He laid off 40% of his workforce in favor of the bet he's making on AI. And then he said, other CEOs around the country better start paying attention because this is the way that it's going. And so while I agree AI is coming, it's already here, it's changing every day, I'm not in the camp that it's going to eliminate. I'm in the camp that it's going to enhance.
Right.
But yet you have the fear mongers, right? So you have them out there going, oh, my God, this is the end of the world. And so, I think it happens during every industrial revolution. I wasn't around for the first two. But this one, yes, it's a little bit more. This one's a little bit more dynamic because it's about the technology and what the technology can do. And that's all. I think it's just a bunch of fear-mongering headlines meant to create all this panic, which I think is ridiculous.
There's two things I want to disagree with that. First of all, based on the grayness of Kenny's beard, I think he was around for the first industrial revolution. That's number one. And two, it would not be the most unusual thing in the world for a disruptive technology to adversely affect the labor market in the short and medium term. I 100% agree that eventually technology is a great thing, but if our workforce is not structured for it right now, it could be somewhat clumsy transition. And I think that there's some fear. Yeah.
I think you're right, but I also think that happens in every revolution, right? That that, there is disruption along the way and it creates this fear and anxiety. That's true. I'm not taking away from that. But in the end, I think it's a matter of, you have education's going to change. What people start to study and what they do is going to change. New opportunities are going to be created. Yes, it's going to be a little bit nerve-wracking going through it. I agree. And so there is some of that, but I don't think it's an all-out, oh, my God, this is the end of the world.
Same.
There's always some losers in these techie revolutions, whatever they happen to be.
Right.
There's always some losers, but the winners overshadow the losers.
Agreed, but it takes time. You agree that it takes time sometimes, correct?
I don't know, because the one thing all three of us lived through was the information revolution. Okay,
right.
The Microsofts and all the rest that went with that, computers, right, internet, right, all that stuff. We've all lived through that.
And look what happened, Larry.
Right.
Look what happened. Look what happened to my job. The perfect example at the New York Stock Exchange. Look what that revolution did. That job no longer exists, right? So essentially, I got displaced because that revolution impacted that job specifically, and around the country, in exchanges around the country.
Yeah, but think about but then you rebounded and moved on to a different position. But the point is, if I go back and look at the 80s and 90s, which is the information revolution, I mean, people use computers. Word processors turned into computers, and dinosaurs like me had to learn it. But the economy did great. The economy did fabulous.
Agreed.
That's my point. That was the last revolution we've had. And if you use now this one, there's a lot of unknowns and uncertainties. But I'm going to bet that the economy is going to do great. We're looking at productivity, but we're looking at building new factories and construction workers. It's already showing up in some of the data. I mean, Trump has opened the door. This whole depreciation revolution is so important. If you build factories, you're going to have to hire people. You're going to have to hire people to build them, and you're going to have to hire people to staff them. How can that be bad? I don't know. I don't get it. I think you're going to 50,000, you're going to 60,000, 70,000 on the Dow. How long that takes, I have no idea. You're going to 7,000 on the S&P and above. I don't know. Profits are killing it right now.
Yeah. No, I agree with you. I just think that to Jimmy's point, your point, there is that anxiety, and I get it. There will be disruption. I get that as well. But they're on the other side. I think it looks bright. It'll be different, but it looks bright.
Yeah, but for asset prices, even in the short and medium term, it can be excellent. If they're easing rates and adding liquidity to because of job losses from AI, those same job losses that are making companies more productive, more efficient, and more profitable, they're literally injecting money into a system where the stocks and the corporate sector is already doing fine to support the labor market. That could be excellent for risk assets. That part is not what I was talking about. Although I do think there's some volatility in corrective phase just based on what I said before. But I do think I'm ultimately an absolute bull on equity markets and a bull on the economy. It seems like I'm a bull in a year on the economy more than you guys are.
Well, listen, I don't think cutting rates by a quarter of a basis point is going to help what's happening to the labor market today.
I don't at all. I agree 100%, but it helps the stock market, right?
Yes, it helps the stock market for sure, and it helps investors, yes. But it's not going to – people aren't losing jobs because the economy is in a bad place. People are losing jobs because the economy's changing, right? Technology is changing the economy. And so cutting rates is not going to stop that process.
I don't think, by the way, we have to take a break. But the job numbers, the private sector job numbers, doing just fine. It's the government, federal jobs that have plunged by 300,000 or 400,000. Trump referred to that in his State of the Union. But those are phony jobs, right? We know that. They don't produce anything. They produce paperwork and regulations. Keep your eye on private sector jobs. They're doing pretty well. Going to do even better. Anyway, take a break. Jim Iuorio, TJM Institutional Services, Kenny Polcari, Slate Stone Wealth. I'm Kudlow. We'll be right back. And we've got two sharpshooters, two old friends, Jim Iuorio, TJM Institutional Services, Kenny Polcari, Slate Stone Wealth, two market veterans. Jim Iuorio, what's the interest rate outlook? What's the bond outlook? It's so interesting. Mortgage rates dipped below 6%. 30-year Freddie Mac, 5.98. I don't know if you think it can stay there or not. The 10-year 3.95. That was the close yesterday. 3.95, down 13 basis points. In fact, the whole Treasury curve got slammed. I don't know why everything got slammed yesterday. Perhaps that's it. What do you make of it, Jim?
So I have a hard time believing that the 10-year can go much lower, considering that the Treasury has, essentially $2 trillion to sell to finance the deficit, and then another $9 trillion is the wall of maturity that's happening this year too. So I have a difficult time thinking it can go much lower than this. I think one of the reasons that it is lower, and you're going to think I'm a crazy tinfoil hat conspiracist, I think that people believe that now that the Fed has started increasing their balance sheet again, that it's just a eyelash away from buying longer-term bonds if they felt they need to. So in my mind, that puts a cap on the 10-year, and that cap is probably not the 4.8 or whatever. It's way far gone from where we are right now. But I do think people think that yields are capped on the upside. I also think that money flowed to the 10-year because it was flowing out of tech stocks. And I think it was just kind of a normal rotation. And I don't think people are particularly worried about inflation anymore, and I'm not. But I think that 4% seems to be a kind of a floor, maybe a little bit below it, but not very much more in the 10-year.
Well, I don't think many people are buying the Iranian stock market right now.
I don't think they should either, right? And they'll probably, the knee-jerk for this is probably, 10 basis points lower in the 10-year when we open up on Sunday. And I hate, I know these things sometimes happen on weekends, but I would love markets to be open to see how the money is interpreting these events.
Ken Polcari, though, Kevin Warsh, who's going to be the new Fed chairman, he doesn't want to expand the balance sheet. He wants to shrink it.
Yeah, no, he wants to shrink it.
He wants to end QE.
Yeah, because he said it like 5 years ago. You guys, I'm not sure about this. That was a long time ago, wasn't it?
Trust me.
No, listen, if he wants to cut rates, he has to shrink the balance sheet.
I talk to him a lot.
Oh, yeah, I forget you. Yeah, I forget who I'm talking to. You might know better than I.
Trust me. Now, how he goes about it will be trickier. I'm not saying you can just, snap your fingers or blow a whistle. But I don't see him buying a lot of bonds. We don't have much time left, but I just don't, he doesn't want QE. He doesn't want any Qs. No more Qs.
Yeah.
I hope so. Yeah, he doesn't. From lips to God's ears. Yeah.
I mean, what the hell? Profits are more important than Qs.
Yep.
Yeah, I know, and I agree. But he doesn't want any more QE, for sure.
So that's, we're going to have sounder money. Sounder money. That. Inflation may come down. We'll all live happily ever after. And hopefully there'll be regime change in Iran. Anyway, I'm sorry, we got to pull out. Thank you, both of you. Terrific, Kenny Polcari and Jim Iuorio. Liz Peek and Steve Forbes coming up next on Money Politics. I'm Kudlow. Please stick around.
Thanks for listening to The Larry Kudlow Show. You can hear The Larry Kudlow Show Saturday mornings at 10. If you like the podcast, share it with your friends and listen anytime at WABCRadio.com and download the WABC Radio app. Hit that subscribe button on all major podcast platforms. Plus, follow WABC on social on Instagram, TikTok, Facebook, and X. See you next time for a new episode so you never have to wonder.
What the heck is going on here?
Rural Americans deserve access to the best of what our country has to offer, especially health care. Across every state, every community, America's rural hospitals are the first line of defense, protecting our families, neighbors, and loved ones. No matter where you live, hospital care doesn't clock out. They're there 24 hours a day, 7 days a week, 365 days a year. Each year, America's over 5,000 hospitals care for millions of patients, providing 24/7 emergency care, delivering delivering babies, cancer treatments, and other life-saving care that patients rely on. Behind every one of those patients are doctors, nurses, and caregivers working tirelessly to keep people healthy and safe. Hospitals are our community's lifelines. They employ our neighbors and keep our families healthy. But now, some in Congress are threatening access to care. Tell Congress, protect patient care to keep America strong. Don't cut rural health care.
It's tax season, and at LifeLock, we know you're tired of numbers. But here's a big one you need to hear. Billions. That's the amount of money in refunds the IRS has flagged for possible identity fraud. Now here's another big number. 100 million. That's how many data points LifeLock monitors every second. If your identity is stolen, we'll fix it guaranteed. One last big number. Save up to 40% your first year. Visit LifeLock.com/podcast for the threats you can't control. Terms apply.